Hey, everybody. Good morning, good afternoon, good evening, wherever you are in the world. I welcome you back to my channel. I hope you all had a great weekend and you're ready for yet again another busy week in the markets. As you know, every Sunday I like to go through around 15 or so names that I like, and I share a bit of my thought process behind each pick. And always, I do like to put this reminder in. If you do want to receive my watch list a day in advance, so you can use it as a form of homework to prep and create your own analysis before my videos get released, make sure you follow me on X at ABTrades. Remember, none of this is financial advice. This is just me sharing how I'm approaching the market, and hopefully, it gives you a few ideas to add to your own watch list. So, without further ado, let's go ahead and get started. To start off the week, we do have Tesla on the watch list. Now, I want to bring up some little key points and potential scenarios. So, I've had these two little outlines drawn from when price was coming down into this really strong inefficiency on the daily and weekly. And I started to kind of draw it out a little bit more in depth when we had this exhaustion candle here on Friday the 21st that didn't actually take out our Friday 14th low. And so when that started to happen, I drew out two scenarios. Scenario one was we push up and reject the gap and come and fill the lower gap, which is also like another all-time high breaker, which would have been really nice. And then you have like a three driver pattern. Scenario two was we push through the gap, find some stability, maybe establish a higher low on the hourlies, and then continue on up. Both paths, though, in my opinion, regardless of like what happened here, if we made a new low or not, both paths for me into end of the year or early Q1 2026 both pointed up into 471, 493, and maybe somewhere in the 500s. I'm not entirely sure about that yet. Now, we did come into a strong pivot here, which was a really nice daily OB. So this is a really good PD array, a form of supply, where pretty much price resulted in a daily sweep that then pretty much gushed down 1, 2, 3, 4, 5, like within a week, right? From 450, 460 to like 380. So we had a really quick and aggressive displacement down that has now started to kind of mitigate itself. Right? You had a gap down as well, you had a bunch of supply, and now price is starting to characterize itself with buyers. Right? This trend is starting to shift back into buyers' hands, and we did reject the 50% of this body candle. So one thing I want to kind of keep an eye on moving forward is we do know, once again, if I anchor this out, we know that Tesla has always struggled, at least not always, but within the past when we were up here, anything into that 460 has always been very troublesome for Tesla. So those are going to be the two things I'm going to be watching, right? Is how does price develop above this 457, and can we actually get some strong candle closes through 460? If not, we could look for some interim little dip. We do have FOMC coming up, so FOMC could be some kind of catalyst that does give us a preliminary dip on this. But if we start to see some proper candle closes to this, I would like to see this kind of expansion continue on out into the uh, maybe high 470s, low 480s, maybe even 493 if possible. And that would kind of complete this consolidation, manipulation, distribution, right? Our AMD, our power of three, where you build and absorb orders, you manipulate one side, and then you catch them off sides and fully expand to the opposite end, which could also be some form of broadening too, right? If you want to take into account, which would be nice. Really nice little overall big broadening. You do have the AMD. Key thing is, can we still stay above 431, 434? This is kind of my pivot for buyers, and sellers do have the advantage at 457, 462. So this is the key area I would like to see some 4-hour closes through that show continuation. And if not, I'm looking to see if we can get some kind of interim dip in between the 434 and 442. But overall, hopefully this expansion continues to play out and we do get that final PO3 into end of the year. Next up on the list is LMND. And this one's actually a pretty clean chart when I zoom out and show you the weekly. Look at how beautiful this Wyckoff accumulation that developed over the course of 2+ years. You had your expansion, So this to me looks like a really nice buy side of the curve model, right? Our market maker buy models. You have the aggressive expansion, higher low, aggressive expansion, higher low, aggressive expansion. Is the expansion done, or do you get a higher low to continue? And I'm looking to see if pretty much all of these pivots here get cleaned up. So if this expansion continues to favor buyers, I'm looking for this really nice base. And you can see how it goes through these cycles, right? You build a base for about 6 to 8 weeks, 6 to 8 weeks. Maybe this one trades out a little bit earlier, or do you have another 2 weeks worth of development? And I really like Lemonade too because, a lot of these growth names tend to have pretty good seasonality into the end of the year. Um, so keep an eye on these growth names. You have a really pretty inside hammer month coming off of an aggressive displacement. The last one kind of consolidated for 2 months and then broke out. This one you've been consolidating since the month opened, but really, really good development. I would like to see a completion into 91 and 100. So I would love to see this kind of really aggressive base finish off into 91 and 100. Looks really, really clean. I like so far how this daily is developing. Again, don't be surprised if you're in a range as it has been, right? When you start to get those slow creep back up, it tends to kind of shake you out. So if you don't get any immediate push through 88, keep an eye out for something like this too, right? That then trades out. I would love a sweep because that would give me a really clean entry from this range perspective because you still have top range and the bottom of the range here. And I like how these ranges are being identified because this last one was above your last all-time high. This one is now consolidating above your last all-time high. So this becomes a really good flip point, and you have your earnings catalyst that anytime you do probably approach this gap, you're ready for those buy orders to send you back up. So again, if you don't get any immediate continuation through that previous month high, which is some aggressive candles, you want to see this kind of candle, right? You want to see these kind of candles to kind of give you that continuation. Otherwise, look for a potential range sweep that could kind of develop this further. But it's literally giving me deja vu of what it did last time. So could this be ready for its next cycle into its expansion? Next up on the list is CMG. And I believe I have it drawn out over here. Yep. So CMG, I am keeping an eye on again for round 3, and that is because of the development that is occurring here. So this was where we wicked off when we had earnings gap. They tried to recover it, and then they ascended us into new lows. Then we had a really nice base established here. We had a nice gap up with a 4-hour inversion gap that was respected, consolidated for a bit, and then broke out. Now price is funneling again. And the way it's funneling is you can take into account like this last retracement to this push up. So this is our threshold or our equilibrium of this expansion. If price consolidates above it, great. If we get some kind of consolidation that slowly gravitates towards like middle of the 32s, I think it becomes a really good higher low. Now, what I like when we're looking at these structure changes or whatever is, or structure continuations, is how does price move within its internal? Remember, price is fractal. So if we have this overall leg off of like a daily trend, and then we zoom into this one, right? And within this leg, you have something like this. Price is now giving you that staircase compression that I like to talk about, right? That creates really good momentum for liquidity run because of how compact price is being funneled. It's not, you're not aggressively breaking down like this, right? Because now to get over each hurdle, it's a lot harder, right? But to run through this, it's easy. You can literally just run right through it versus something like this, which is why I talk about, hey, watch how price is being absorbed or how price is compressing or how is price developing after a very large move. And this is exactly kind of what I want to see. So I'm keeping an eye on Chipotle for its second, or not second, but third leg of expansion. Right, first one, second one, and now do we get a third one to fully deliver deeper into the gap? I really, really like this a lot. And I'm either going to see if this gives me an early entry or if I buy something down here. And either or, right? Even if you're positioning here or here, as long as you get time, I think it's going to be okay. But yeah, this one's setting up really, really nicely. When we go back to the daily, you can kind of see how that funneling is taking place here. And I would personally love I mean, you have this here. I would personally love a discount, but if we develop above this, it doesn't have to fully give me one. And I would like to see something like that. And then you can also take the manipulation from here to see where your -2 up to -4 is. Yeah, and look how clean that is. Look at where the arrows point to. Almost exact. It's like 36, 37 would be the next extension targets. Looks really, really pretty. I cannot lie. Next up on the list is Uber. And the reason I like this one as well is because we had these really nice lows from June. And remember when I talked about earlier in the past scenario in CMG how like prices being funneled? Look at this one, right? Look at how you're funneling and compressing price, and look at how easily it just runs through all that. And so the reason I like this too is because you've pretty much taken out all these lows. You came into a really nice monthly area. And when you had this aggressive daily displacement into that weekly and monthly sweep, look at what price does afterwards. You stall for a few days, you displace, consolidate, displace. And so I like how this has changed the narrative. And if I can get some kind of like higher low to trade higher into the gap, that's going to be perfect for the outlook that I'm looking here. But you had a inversion off the lows with a gap, then you consolidate, then you have another gap. So you have two supportive confluences of a potential reversal change here. And now we're kind of struggling at these previous little range lows where that displacement did start to occur. You do see this little sweep. I'm not sure if you took this out, 92.92, 92.75. So now you have kind of two clean relative equal highs up here too. So if we do get some kind of early retracement, or as long as price can, for me, stay above 86.90, I mean, I feel like this has already been tested. And if you do get something deep like this, then we have to take this into account. We have to look at our potential retracement. The reason I'm not taking into account discount right now is because there hasn't been enough validity within like the development of these candles to kind of confirm you're getting a retracement, right? So anchoring your fibs just to anchor them is incorrect. You have to actually start to address, hey, are we getting some kind of pullback on these candles? So this is arbitrary because I don't know if this is going to be the candle that, starts to give us that retracement. But if it does, then I'm kind of already prepared. And you can see where this inversion also lines up. You have the golden pocket and the sweep. So if you go for a deeper sweep, then this would also be a pretty good entry. So keeping an eye on these scenarios. I like the potential reversal structure here, especially off of a really nice LRLR sweep into a monthly low that has been countered with displacement and gap ups. And now you're kind of leaving this up here to target. So I really like this one. Airbnb, we are in an active trade in this in the Discord. Pretty much clean LRLR with manipulation lows. Really good AMD. If you look up ICT PO3, this is exactly what you'll see. Consolidation, manipulation, distribution. So if you do get some kind of pullback, I do think it's buyable, and I am looking for targets into 126 and 130. AEHR, I really like the little manipulation sweep here into a really nice gap, and then the change in state of delivery from price, right? You get the daily sweep, then you counter it. And now you aggressively displace through displacement, compress, another displacement. So I'm looking for some kind of higher low on the 4-hour to continue trading this out into like 26, 28. Really pretty chart though. You have a lot of nice liquidity to run to as long as you can respect these displacement candles, right? So if we're going to retrace inside day, you could see a 1-2 down rev where you push down a wick and then trade higher. Or do we get a deeper extension? Again, this is still arbitrary because there's not enough confirmation of the retracement, but if it does, there's still confluence at the golden pocket, right? This was also a previous breaker that wasn't tested. You have a volume imbalance and some minor HTF inefficiencies as well. Next up on the list is ANET. You can kind of see how a lot of these charts start to look pretty similar, right? I'm looking for those reversal structures that are showing me that change in delivery of price, right? If you're getting an aggressive sweep into one, I'm looking for, wait, now that we've aggressively swept some lows and you're doing it with displacement, right? Look at these candles. These are aggressive displacements. What I'm looking for when I'm looking for these potential reversals is like, how is price responding afterwards, right? Nice wick with displacement. And then you come in and now you're kind of consolidating price a little bit here. So if I show you here, for example, like when I highlight where these imbalances exist, right? If if ANET starts to go into like this compression state, I want to lean that this starts to trade higher, whether if you dip or not, or you just kind of get stuck in this range for a little bit. I think price ultimately wants to magnet up into 138, 140, just due to the delivery of price and what you started to do down here, right? You have a nice BF inversion. You came down and respected it. Now price is just kind of absorbing. And I think this absorption could take you into that next leg up, regardless if you dip or not. I do think this can trade up into 137 and potentially 139. But really good response off of these previous month lows from this aggressive outside 3 bar that then gets countered with back-to-back displacement and gap ups. And now after this strong move from 114 to 130, 132, now it's just kind of developing. So let price develop. And I think if price trades out the same way it came in, you came in from down up, I think you can trade out the same way, down up, right? So that's kind of what I'm watching on this one. I would probably flip short if you lose 120 on this. Next up on the list is SNDK, and this one is just a freaking wicked chart. Look at this weekly, right? I mean, you expanded for who knows how long. Multi-week expansion, finally saw some slowdown, but then when you kind of go back and look at these dailies, look at what price did here. Exhaustion at lows that then counters this gap with back-to-back daily displacements. So for me, I think price has an objective and you want to take out that previous week high. So I feel like a previous week high that then slows down, maybe a higher low, and then runs through all of those highs. But this is really good price development, right? You pretty much finally halted and price came back. You restructured this gap and you had exhaustion at lows that countered the gap and then countered the gap. Both gaps got displaced through. So I'm definitely keeping an eye on this one for that previous week high sweep, then maybe some kind of reversal that then targets the next gap. But from a multi-time frame like perspective, and I'm looking at this from the weekly, I'm looking at this from the daily, 2-day, 3-day, like this just looks super clean for a, whoa, excuse me. This just looks super clean for a really nice base break soon. And you're pretty much already starting to see signs of that. So as long as SNDK doesn't lose, in my opinion, 197, I think this development can start to favor like another $40, $50 move higher. Following along the same thing is WDC. Now this one's already pretty much done it. And again, look at this is why I bring up these examples, right? When we get these aggressive sweeps and lows into a previous month low, how does price respond afterwards? If we're going to aggressively displace down, price should retrace and reject and continue that trend. But why is it that when some scenarios like this happen and you come into those established monthly ranges, why does price gap up, displace, and then you counter it, right? This displacement was now countered. So we have a nice overlap. And I usually like to reference them as those broadening formation inversions because you aggressively sweep lows from an external perspective and then you displace right through it. Push up, gap, retrace, get continuing on. So I think this one's already setting up for a really nice previous month high delivery. Look at all these time frames, right? Inside 2 week, hammer on the week, that showed follow through. 3 days inside. 2-day is showing some really nice displacement. So if price has this objective to continue higher, I'm looking for new all-time highs on WDC. And it's very similar to SNDK, but this one is the one with strength. SNDK could be the lagger of this theme. Next up on the list is Google. And this one, I'm trying to see whether or not we respect this 4-hour inefficiency here, or we get some kind of delivery down. But overall, this is just really good internal buildup. When I talk about those expansions and then price just kind of compresses for the next leg higher, that's exactly what I'm seeing here with Google. So as long as you respect this gap, 317, I don't think you get a deeper retracement. And I think from here on out, you probably just target 330 plus. Very simple chart. I really like the overall buildup. It's really good. And this is exactly kind of what you want to see when you have internal development or prices just absorbing its most recent expansion, right? You like to see that kind of compression state that just kind of springs and runs higher. Next up on the list is Pfizer, and I've had this one annotated for the group for a while now. Pretty much what I was looking for is you have this really nice 4-hour manipulation candle that also gives you some similarities to Wyckoff model. You see how you kind of consolidate, break down, and then aggressively redistribute to the highs. So what I was looking for when this happened, I was like, hey, don't buy yet. Let Pfizer retrace into this 4-hour discount, which it did, and you respected the gap. You did not fully deliver down. Remember, if it was going to fail, it should have failed here. You should have pushed up and then rejected and gone lower. Rather, you then counter this displacement with displacement, and you respect the over a higher low of this manipulation low into new aggressive highs. And now price is kind of just slowly following. So I would like to see Pfizer continue up into those previous month highs. And this one's been one we've been tracking for a while now. And the only reason I bring it up is because if you're looking for maybe somewhere to rotate your money into that looks pretty clean, I would put money on Pfizer. Sweep these previous month highs and potentially run into like 2670. And if it wants to go higher, even better. But the main objective is those previous month highs based off of how this 4-hour daily and even your weekly look, right? This is a very, really clean weekly. You went outside 3. So super nice chart when you look at your daily and your 4-hour. I would love to see follow through. I would kind of invalidate my thesis, and it sucks because this one is more of an invalidation under like 2440, which is pretty deep relative to where you're kind of looking at price, especially off of previous week high. So see if you get some kind of range established and then you continue on higher. But I do have a objective of 2650, which is previous month high, and somewhere in the 2670. Bill is a fantastic chart here. When I go to this chart, and this kind of follows the cloud theme. I just really, really like this weekly buildup. You have this weekly sweep. So let's look at the structure here. You have this little low, exhaustion at highs, sweep previous low, aggressively run the highs. So when I annotate this chart out, you have now a nice new structural development. So you go from range low to range high. And when I anchor out my fibs, I'm looking for that retracement into the discount, which is exactly what Bill did. If this was going to be a true change in its development, this is where you find that entry. And you can see how Bill comes perfectly into that weekly discount, which is where you also establish that inversion here. And then you compress, and now you're trying to displace higher. So based off of this alone, as long as Bill stays above 48, excuse me, let me delete this because it bothers me. As long as you stay above 48, I want to see continuation up into 57 and 58 and maybe even 61. So I want to see this pretty much price development that's been occurring for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, whatever, 12 weeks, whatever, 3 months. I want to see this quarter development now pretty much trade higher. So that would kind of be my thought process there. You can even use the weekly as a reference point. So the way this kind of closed out, you now have a lot of this to work off of. So if price does give you like a $2, $3 retracement, I think it's buyable as long as you can respect 49 and the risk reward starts to increase as you kind of come back into that. And let me see if you swept 54, 5403. So you did sweep. So you did take out a previous week high here. So you could watch for a potential retracement to run it back up into the 57s. Really pretty chart nevertheless, though. The higher time frames look super clean. Following the following the cloud theme here. So one thing I was looking for on Adobe was these kind of sweeps here. As you can see, we had it annotated here, and now you have a really nice daily aggression. And so what I'm looking for is, let me redraw this because this was from, you can kind of see how I'm going about it. This was from a old chart. And so when I show you the weekly, look at this crazy LRLR, man. It's really going to come down to earnings, but if Adobe can have, so maybe you want to play this as like an ER gamble, but this is weekly displacement off of broadening lows that aggressively reclaimed these really strong established lows here. So if Adobe has a good ER. If you want to trade it, I do think Adobe has the potential to run into 380. If this plays out the way I think. Obviously, earnings is a hit or miss. You can even do this, right? This could turn into a new cycle where you push up, then you make this, and then what do you have that could develop further into like the new year, right? So definitely scenarios to keep an eye on if that does occur. Definitely trade this more as like an ER gamble, but if ER is good, I mean it's right around the corner, this can definitely materialize into that 380 plus or 368 into 382. Qualcomm, I really like this off the broadening here, and you had really nice funneled price. You did get some displacement into the lows, but ultimately you kind of countered it. So now for me is as long as Qualcomm can stay above 167, I would like to see this start to develop into its next cycle here, and I am targeting into the end of year, early next 183, 186, and maybe back into the 190s. But really good development. It didn't really kind of cancel out, and you can kind of see how it's pretty much respected this overall little trend here as well. Whoops. So each time it's funneled out, you've had a pretty good succession in its continuation of that expansion. Push down, succession, push down. Now you have some pretty clean like liquidity to run through here if you can manage to stay above 167. So 167 is kind of the area that I need to see holds, because if you do flip back under this, then it changes the overall structure from like the weekly standpoint, and I would start to then target back down to like 150s. So all eyes on Qualcomm to see if we could stay above 167 and to see if price can now consolidate cleanly above this to give you that continued expansion. Another one on watch is Twilio, and I really like this compression into your earnings gap, which was also a respected breaker. And I believe it was also the golden pocket from this range to this range, right? Nice discount that then showed really good delivery. Now you have an internal broadening here, and which is kind of what we had mapped out so far as playing out. As long as Twilio stays above 120, I do think this can now start to try and trade out back up into the gap 133, 134, and ultimately give you the expansion you need on the daily to take out those previous month highs. So as long as, remember, as long as Twilio stays above 120, I would like to see this kind of play out back up into those highs. So you have some clean highs here to take out into a gap. So maybe the initial target's like 133, 134 relative to that 120 low. So you have the swing low to swing high. You get that really nice compression state into discount paired with a earnings gap, previous range high breaker, golden pocket, price aggressively delivers. So now we're looking for swing low, swing high, swing low, swing high, and now we're within that internal development. And that internal development, we want to pretty much have price respect 120 that can give us that continuation into those previous month highs. So yeah, that's pretty much it for today. And looks like we made it into that 28, 30-minute threshold that I like to keep. As always, that I do these videos to hopefully help you see how I look at price. Maybe you learn a thing or two. And if you have learned something, comment below. Tell me what these watch list videos have taught you within the last few months. I just want to make sure you guys are learning, and I want to help as best as possible, and hopefully not give too much information overload, but just enough to where you can kind of understand, okay, this is why he's charting it the way he is. So remember, my subscriber count goal is 5,000 subscribers. I would like to get that so I can start to release my educational series. I know a lot of you are still waiting on that, and I want to get it as soon as possible. But I just want to make sure that I get to that 5,000 subscriber mark. I don't think that's a crazy goal, so please help me out, help me get there. Let's do it as soon as possible, and we can start to release the My Method Your Market series. And without further ado, that's it for today. See you guys.